Good afternoon, everyone. I'm Karan. I'm the CLO at Gnosis, and I'm going to be moderating the discussion today on the role of Web3 gatekeepers in the context of traditional financial systems. And I mean, we've seen, a significant transformation as we're starting to adopt new Web3 technologies and fulfilling the role of gatekeepers. And integrating those to provide access to traditional financial systems and institutions. And the purpose of discussion is just to explore in a bit more detail today with the panelists on how that function of Web3 gatekeeping is changing and redefining the role of financial intermediaries and the way that we grant access to these systems. Just like to ask panelists maybe to give a brief introduction of yourself and your projects, and then we'll get into some questions.
Sure. I can start. So my name is Andrea Camacho, Principal Product Manager at Elliptic. My job is really to build solutions for our customers to make sure that we provide visibility and transparency about their users' footprint on chain, making sure that they have visibility and a level of comfort knowing that they are happy to provide a service to them. Imagine, for example, you're a traditional TradFi institution that is dipping their feet into crypto, or you're even a native Web3 company. The first thing, or very close to the top of your agenda, you want to make sure that you're not interacting with criminals. You're not, for example, facilitating money laundering within crypto. You're not financing or facilitating payment that end up financing terrorism. And so my job is really making sure that we create these solutions that help protect both the users and our customers that are asking questions about their users.
Well, good afternoon, everyone. Thanks, Jens. Marcos from Gnosis Pay, basically eliminating barriers between Web3 and Web2, hopefully making everything turn into one.
I'm Julian, one of the co-founders of the IDOS, and we are all about identity. The IDOS is a decentralized storage solution to store user data, and we all know the proof of personhood use cases. Our thing that we want to solve is to be able for the identity to be also be used in highly regulated use cases. And I guess that's why I'm at this panel.
Thank you. So maybe we'll start with some general questions that I'll put to the whole panel, and then come into a bit more specific questions on each of your specific projects. So I'd just like to put it to all of you, like, how do you see the role of gatekeepers changing as we start integrating more Web3 technologies into traditional financial systems and bridging that gap that currently exists today?
Yeah, I can probably start and give my view here. So it's a very interesting question because I feel within Web3, the dynamics are really changing. And when in traditional finance, the role of the gatekeeper was the same and was within a specific company to ensure that there's very good visibility about who are the participants that are leveraging the service of the institution. In Web3, we're starting to see this separation between the role of the gatekeeper and the role of the companies or the project or the sort of service that helps to provide visibility about the activity. I see myself and I see Elliptic more in this second space where we provide visibility about one's on-chain footprint. And that's very distinct. We tend to not be particularly opinionated on the level of compliance risk that a user poses, because the role of the sort of gatekeeper and the ultimate decision will still sit within a traditional institution. However, what's very interesting is that the whole technology starts to become a bit more of a primitive that is extrapolated out of the financial institutions and then is made available to a much wider audience. There's a lot of efficiencies to be gained and also an increased level of effectiveness with which this new type of primitive can help to provide visibility.
I'm personally very enthusiastic about this topic. First of all, because when you're trying to connect two worlds, the old or the traditional world, all the decisions based on, are you allowed to transact? Are you allowed to have an account? Are you allowed to hold money? They came from an understanding of what a regulation meant. And that understanding had a lot of return on investment incentive, which means how many cents of a dollar do I need to invest in order to get a dollar. And if that user fits that profile, then very likely that you're going to be accepted to start banking. And the fact that we now opening that Pandora box and put it in a format that is a lot more transparent if users are available to transact, like if they can, if their information, well, it's blockchain, right? It's you carrying with you, which is the entire objective of open banking and regulators in general. So when you actually go from that angle, I feel like ensuring that gatekeepers have the right understanding of the user and the users are actually worried about how are they going to be perceived by institutions, that's a good, that's a perfect new world to tap in.
I believe that if we're looking at those two systems right now in the financial world, we have the current banking system and we have the DeFi side, right? And those are on very opposite poles. And ideally, we have a very permissionless system in general. Now, in the last decade, we haven't really seen the adoption in the crypto side. And I believe that for us to really change that, it's the base question of do you change a system by completely erasing it, building something new? We've tried that. It got us here, which is quite far. But I think if we really want to go to the mainstream people, then we need to change it from within. And I think that will, in general, make it better. Because I'm kind of tired to just have this technology be available for technical savvy people as well, which also I believe is a restriction. Now, do I like that there are central gatekeepers in also the whatever the new system is called, somewhere between banking and DeFi? I really don't. And I think that the current systems are not nuanced enough by far. For example, we do not want to just keep people out because they are misfortunate to be born in a certain country, right? But unfortunately, this is what we have to enforce today. So by giving different options, and this is the thing that we are excited about, we might be able to help because people are finally able to vote by their feet who they want to identify themselves with, to change that one by one, because right now we're living in a very monolithic world when we're talking about finance. If you're in one bank, you can only use the products that this one bank has. And this is terrible in the first place. And we're not talking even about like having something available that is beyond your nation state, right? But I have to admit I'm quite conflicted when it comes to being even on this panel, you know, because I guess this is why we are all in that space, to reduce the impact that central gatekeepers have on our everyday lives.
I actually want to build on this because I think it's a very, very interesting point that you made. When I read the sort of title of the panel, I was like, I'm not a gatekeeper. I don't want to be a gatekeeper. And actually, I think that's still something that you can reconcile together, right? I feel like companies like ours and projects like ours help to provide transparency and visibility about certain information. And then the virtual asset service providers, the TradFi, the various Web3 natives, everybody with this new added visibility have the opportunity to decide, I'm comfortable interacting with this user. I'm comfortable providing services, or I'm not. But I think the gatekeeping side still sits within whoever provides the service. While I feel like our role is more, this is going to be a horrible analogy, but more like a Garmin watch where we provide information and then it's up to you to say, well, I'm comfortable with the number of steps that I did today, or I'm comfortable with the number of runs that I've made this week.
Allow me to slightly disagree. And maybe there is a fundamental element Today you have centralized companies which are saying, I am the guardian of your data or the gatekeeper of your data, and I'm giving you access to interoperate in finance. Once you're separating bankers from banking, maybe I'm a bit biased on that view, then you're kind of shifting responsibility. That entire view that you're just basically providing someone with software, that's a short-term thinking. On the long-term thinking, our responsibility is not going to be anymore to collect those 30 data points on where do you live, white person, blue eyes, engineer, potentially not a risk to the community. Our job is going to be to effectively collect thousands of data points and then provide with certainties or provide with more guidance for decisions to be made. And then there is an element of risk, which is still going to be held by service providers to say, do I want to serve this person, yes or no? But the guardians and the gatekeepers are those that are basically able to help tracing this data and not just give it with a generic flagging system that someone one day implemented, but rather basically help to say, okay, now I'm connecting all this information, and from our view, this should be with X amount of percentage. This person is legit, his business activities are legit, up to you if you want to do business with that person, yes or no. So I think in one hand, you have a greater responsibility compared to the past. On the other hand, you also have a greater opportunity to then become a lot more relevant, because KYC is not about just saying, yeah, passport, data, address, but then again, it's a more intelligent, intelligent is not a word, but a lot more valuable to the community information.
I think that's a really interesting point, because blockchain technology gives us access to so many different data points now that are permanently recorded on chain, and that can be linked to a particular account that gives us visibility on people's behavior way beyond what we're able to access today without the user volunteering that kind of information, right? And that opens up all new kinds of risk analysis, right? And I think the role of Web3 projects who are trying to bridge that gap is to demonstrate to TradFi and to regulators how we can achieve the same regulatory objectives, but just using different sources of information and taking a slightly different approach. And I fully agree with a comment that you made as well, Julian, which is around the role of centralized gatekeepers. I think we need to start transitioning into a decentralized model, right? But one that also is consistent with Web3 principles that can ensure that users retain ownership of their data and they choose how they share that data. And there will obviously be different requirements for different service providers on what is acceptable forms of data. And I think that will evolve over time, but it's a process that we need to start now to demonstrate that we can identify people, that we can manage risk using different data points than what we're accustomed to doing today with providing a passport or a proof of ID or a pay slip to demonstrate your source of wealth. So maybe moving on then. So what are the biggest challenges that we face as an industry, to bridge that gap to TradFi and make them understand that there's a different way of putting guardrails in place to make sure that the wrong actors don't participate in this ecosystem and potentially taint it for the rest of us and paint us with that broad brush that crypto is all bad and blockchain is used for things that it shouldn't be used for.
If I may step in there, I think the main problem is that it's so easy to make money with meme coins that no one bothers to actually solve the hard part and to actually achieve what we set out when the Bitcoin white paper came out as a reaction to the financial crisis, to really build a better financial system. And I sometimes feel like we have lost track of that. And when I entered in 2017, I did so because I realized that this will bring open source into finance, and I have to say I've been a little bit disillusioned and frustrated in the last couple of years because I didn't see any progress here. So the thing that kind of gets me motivated is seeing Monerium spike. I'm not sure if you've seen that presentation a little bit earlier. That shows me that this is actually around the corner, and we're starting to bring, just like you guys, open source into that field. So I'm very happy about that.
I am less frustrated. I see actually something quite interesting. First, perception, truly perception. Let's recall what is KYC today in general. And let's recall what is the incentive from the regulator or the fintechs out there. Basic KYC. Who are you? Marcos. Prove that you are you. Passport. Where do you live? Proof of address. Every second kid that was born after the 2000s knows how to use PDF editor. And that person can make a bunch of adjustments. And by the way, every fraudster out there knows this better than anybody else. And then the incentive that regulators created was, because this is the way X person did it, then every fintech out there simply stays with that boundary. I collected the passport. I asked, what do you do for a living? And then that answer is sufficient for everybody to be validated. But in reality, what do we want? What is our incentive? I mean, do we want our kids to be among criminals? Do you want to raise a society of criminals? No. I want to live in a place where it's, free and people are not going to be harmed by others. So I want to make sure that we are better than anybody out there verifying that humans are humans, and they are saying the truth about what they're doing. In fact, I don't even want to ask them if I have the data available to make decisions. So I see that the perception of the regulator, and I don't say this from a criticism point of view, the KYC standards were created, 50 years ago? And we're still using them. And now we have a bunch of more technology out there that can help us to provide something a lot more lean. IDOS as an example. I am the owner of my information, and I will give you a signature that it's valid and recognized by the regulator that this is a legit person. So the two things that I see it interesting, but also realistic about life, people had to put a card image in the phone to say this is an Apple Pay card transaction, right? So you kind of still have to give that nonsense in order to do something that makes sense. And if you basically think about regulators, they need to be helped. And I think a lot of people are either using the role of incentive, I'm doing what you ask, it's not of my problem, don't put me in jail, or I want to ignore until I can in order to do this. So I hopefully us and many others out there can actually do the contrary. Is basically saying, this is what you can actually do these days, this is how much better it is. I will promote a little bit of IDOS because I'm a believer, so please, regulator, look at this as a mechanism to avoid GDPR fines. Because if the data sits in the hands of the user, companies cannot screw up the data. So anyway, bit of a...
I think that's a really important point because, in my experience, TradFi are reluctant to go into the conversation with the regulator in a way that they ask for permission to do things differently. I think that has to come from us within the industry. And because TradFi is so heavily regulated, they have certain standards they need to ensure ongoing compliance with, and they won't change that unless that comes, from the regulator down. So I see that as one of the biggest barriers, to be completely honest with you, and that's, on us as an industry to give reassurance that, we can achieve the same objectives, but using different technologies that can create greater efficiencies, that can provide users with more control of the data, which is stuff that regulators are supportive of. You've got this privacy frameworks in GDPR in Europe and in the UK, and everywhere else around the world where we've seen instances of like data hacks from centralized gatekeepers, and we need to move away from that, but we need to show how we can do that in a safe, secure way that traditional financial institutions can also rely on and trust. And I feel like sometimes there's still this element of distrust between TradFi and the blockchain world. We're slowly starting to bring them closer together. I think there's still a lot of work to be done. But the interaction with the regulators, I think, is going to be a huge part of that role.
If I just may add to that real quick, there is something very interesting going on that by us kind of going more into the real world realm where we want to issue cards, have a bank account, and then also need to comply with certain regulations. There's an interesting development happening that suddenly you see some TradFi players actually adopting our technology, PayPal issuing a stable token. And that has a very interesting effect because, I mean, as you can probably attest to it a lot better, if you're looking at the IT landscape of banks in the last 30 years, this is just terrible. And suddenly you have this process in terms of innovation here, right? When we're talking about gatekeepers, we tend to focus on the user side. What I am also very interested in is from the builder side. How easy is it for me to innovate on a bank stack without having the permission to do so? And this is something that I see changing a lot. Interestingly, because we are creating systems that allow crypto to be compliant.
Great. Maybe coming to you, Andrea, because I think Elliptic serve crypto native projects, but probably also serve now financial institutions who want to dip their toes into the blockchain universe. Like how are kind of the tools that you guys provide helping traditional financial institutions kind of bridge that gap and start having a little bit of exposure to the blockchain world and start accepting this as a legitimate means by which they can offer services to their users? And maybe if you can give like an example of a partnership or a case study of how you've kind of brought traditional finance into the, let's say, Web3 universe.
Yeah, for sure. And maybe I can start by saying that really in the last 2 years, we're starting to see a very significant traction within the TradFi world. Maybe 5 years ago, 3 years ago, we saw the very first like shy dipping their toes within crypto of various traditional finance institutions that were looking at the opportunities there. Now there's a lot of building going on. And the way Elliptic helps TradFi and financial institutions in general is making sure that they get the comfort level that they would require within the older sort of like more traditional fiat system and have at least the same level of effectiveness in detecting illicit activity within crypto. I'm not going to share the specific name, but one very, very large payment provider has relatively recently launched a stablecoin within a couple of networks. The only way in which they were able to do this is by making sure that they had all the tooling from an anti-money laundering perspective, from a KYC perspective, from a sort of like ecosystem monitoring perspective with Elliptic that is able to then making sure that none of the users that are benefiting from this stablecoin, that are moving this stablecoin, are associated with activities that the TradFi will be uncomfortable with.
Amazing. I'm just conscious of the time, so I'll come on to like a few concluding questions, remarks from each of you. Firstly, what trends do you foresee in the coming years, and how the role of this gatekeeper and the technology we use to execute that gatekeeping function? How do you think that's going to change? What do you think is going to be the main change that we're going to start to see? And then what advice or recommendations would you give developers and entrepreneurs wanting to build systems that can contribute towards this paradigm shift? And what are the things that we're missing from a RegTech perspective to give TradFi comfort, that they're not going to be servicing criminals or they're not going to be touching illegitimate funds? Marcos, maybe?
Yeah, so we started in crypto, of course, in the way it should. Freedom, let's build tech, and then we see what happens in the usage. Now, 10 years later, you see lots of usage, very tiny percentage, very, very, very tiny. And if I actually look at banking in the amount of fines they pay per year for actually not doing proper understanding of their customers, it's a lot greater than anything that happened in crypto till this date. So again, very optimistic. Trend itself, I see more and more worry on this topic in crypto, in the regulator, in the traditional banking. So I see that we can basically play that role for more people. Second, it was about, sorry.
What like recommendations would you give developers or entrepreneurs wanting to develop?
Yeah, so my first recommendation is it's there for a reason, and I think the more you understand what regulation in general says, the regulation doesn't tell you how to do it, and it says more like, this is what we're trying to reach. So actually when you read it, it's actually very good. That doesn't imply that everything you do needs to be in a given format of a regulator. Things are much greater. So you can separate. We're building a checkings account. Every fund that goes through that checkings account has a certain rule if you want to play in a given economy, right? So I would say to put guns down, that scene from Inglourious Bastards, everybody with the guns under the table. It's no longer that time. I think it's a lot more like helping them to understand, because it's better for everyone.
Julian?
The trends that I see is a modularized finance, and the tip that I would have is not to build more infrastructure, but use those tools to build cool things, because you would have an intense advantage compared to the TradFi stack.
Maybe one very quick thought. I love all the sort of crypto sleuthing going on and seeing someone like on X or Twitter like following a North Korean hacker or following some terrorist financing, laundering the funds. That's absolutely amazing. And it's just so great to see that on the open, in the public, when all of that used to happen just within certain walls in the past. I think that's just amazing, and I want to see that exploding in the future and see that more and more. It's just great.
All of us.
Amazing. Well, thank you to all our panelists. I'm not sure if we have time for any questions. If there are any, in case.
Yes.
Hi, so I have a question about, over the last few years, we see the more and more regulations coming in, ML 5, 6, 7 coming in the future, MiCA, OFAC sanctions, etc., being implemented. And it seems like the crypto is becoming a permissioned pool of users who can only access crypto after getting QIT'd, etc., etc. So I would like to ask, what's of the previous permissionless ethos will remain if we just mindlessly apply all those regulations and limitations?
I mean, folks in the US would love to have MiCA in place, because then they would have some guidance that they can follow to offer things in the first place, right? Like, I mean, not knowing what to do is the thing that hurts. The ability to just build on tools that actually matter for a whole lot of people is something that I deem extremely important, and just like staying in our small niche to build tooling for very technically savvy people is not something that interests me personally much to like spend my whole career on. What I'm interested in is building tooling that everyone could potentially use, and then we should, I think, also accept that we're living in a place where we all make this regulation, right, in a democracy, and where it's not that the people that have the most tokens make the rules, but actually the people itself make the rules. So if we don't like the rules, we should change that, and we should work on changing that. And having that technology, yeah, I think actually Mika is quite okay there. Like, they let us do a whole lot, especially the P2P side, especially the data ownership side. They understand that. Is it perfect? No, certainly not.
So what's the difference between crypto and TradFi? In the end, like, if we regulate it a lot, what remains that is better than TradFi?
Maybe not really a direct answer to your question, but something I think it's very important to recognize is that the population, the people adopting crypto right now is very different from what it used to be in 2013, in 2015, 2020. And population and user groups evolve. That means that the values also change. And so while I think it's a very fair question to ask what's the ethos that remains of the origins, I'm actually much more interested in knowing what is the type of ecosystem that we want to create, right? What is the type of ecosystem that we feel crypto should be powering for the next 5 to 10 years? I don't have an answer, and I know that obviously there's a number of attempts that are going to be made, and we're going to have to iterate on a number of different angles. But I think it's a much more interesting question, asking ourselves, where do we want to be in 5 to 10 years?
So, first of all, thank you really very much for your question, because we always debate about this. And I think there's two momentums. And I don't think when you're KYCing, you're basically being a TradFi or you're losing the ethos of crypto. I think that's an incorrect thought. And allow me to say that because you have different situations. Think about if you are now an immigrant and you are coming from X country and going to Y country, and then you have to restart your entire financial life to have access to a SIM card. So I had investments in Holland, I sold a property in Holland, and I could not get a SIM card contract in the UK because I did not have, past 3 years, an address in the UK. So there is that element of, basic need that is already resolved with blockchain, because data is portable. It's no longer defined by a country. Now, access to data, when given back to the user, to the owner, it's up to you how much you want to share and how much you want to participate in a given economy. And then I actually love the comment of Julian. The way of fighting is not by avoiding. The way of fighting is by basically having the understanding that it's not the best way of moving forward and eliminating. Because what's happening right now, and maybe a lot of the global instability, is created by passiveness. The more we're able to protect by being forward on knowledge, on understanding different cultures, different needs, then we can actually say, these are the limitations where I'm willing to live, and if not, I can move. But finally, we have a financial mechanism that allows the world to be one when it comes to moving data, and no longer being controlled by maybe worse names out there, but the JP Morgans or Goldman Sachs of the world. Nothing against them, but I perhaps trust more Metri to be my service provider, or I trust Binance to be my service provider. So I think there's a misunderstanding that you are dropping the ethos. I think it's a lot more optimistic than that. I think it's just allowing you to participate at your own terms, but also under a given society terms, at any point in time. So I think gatekeeping, in my view, the responsibility of gatekeepers, the ones that are providing this access, it's a lot greater now, because if somebody screw up, my daughter will only have on-chain data. And that means her life is going to be, available to anyone if not done it in the right way. So I think I love this debate, and I think it's the roots of crypto or blockchain. It's actually the reason why the world is going to evolve.
Thank you very much. I think our time is up. So thanks again to all the panelists. And I'm not sure if there's something else on now. Yeah.
No, that's it. So round of applause for our speakers.
Thank you.